This is Taking Stock on Bloomberg. I'm Pimm Fox. Now, today's GDP report showed that the U.S. economy is growing faster than many had previously expected, a previous report. Now, the market's reacting a little bit positively. Will these signs help restore confidence in the market and also in the economy as we move into 2011? My guest is Mark Bronzo, portfolio manager at Security Global Investors, managing SGI's large cap growth strategy. Mark has more than 2 decades of experience in the equity markets. Good to have you with us on Bloomberg.
Thanks for having me.
So what's the thesis for 2011? I mean, let's not even look at the second half of 2011 because that's way too long term these days. What happens in the first and second quarters? Do you think stocks continue this slow grind higher?
I do. I think what's happening is slowly people are recognizing that the global growth trends are clearly improving, but more importantly, even domestically, there's confidence building that this recovery is sustainable. And I think with that, people are starting to finally be willing to move out of bond funds and back into stock funds. And that's significant because that's what's going to propel the stock market higher.
And why is it that you think that growth stocks are the place to be? Because, you know, there's growth and then there's value. And a lot of people would say, well, you've got to pick over the value stocks. You only want to buy $1 of assets for only 50 cents. Why is growth going to outperform?
Well, that's a great question. Typically what happens at the beginning of an earnings cycle, sort of the rising tide lifts all boats, which is a good environment for value. But now that we've had good earnings, basically all throughout this year, the earnings comparisons next year become more difficult. And people are going to gravitate to those companies that are going to really still be beat and raise stories. And I think those are the true growth names.
All right, well, let's talk about some to give an example, right? I mean, Deere is one of the companies, John Deere, that you're focused on, not only for the construction and farm profile here in the United States, but also for what they do overseas.
Right. The reason we like Deere is if you look at corn and cotton and grain prices, they're all climbing. And we've actually gotten a public admission from the Chinese government that they are very concerned about the very low levels of grain inventories. So people are starting to talk about food scarcity. So what's going to happen in the spring is we think the planting season will be much stronger than expected. And at the same time, farmers' income levels are at historic highs. So it's a very good environment for the purchase of farm equipment, which should be very bullish for Deere.
Okay, so you got John Deere as an example, and also you want to talk about CSX, the railroad.
Right.
Why CSX? I mean, there are fewer public railroads to invest in now that Burlington Northern is part of Berkshire Hathaway.
CSX is a good play on an economic recovery. What we're noticing is that auto production rates are climbing. Auto demand is climbing. Railroads are your primary transportation of moving automobiles, obviously from the factory to the dealership. Secondly, coal. As oil prices keep climbing and as demand for electricity keeps climbing, the demand for coal is going to keep climbing. That's also transported by rails. So we think railroads are going to have very strong loads, very good pricing, and we've seen them, from a management standpoint, produce excellent efficiencies in this down cycle. So we think they're going to have very strong earnings.
And so if you take a look at, let's say, a railroad, the idea being that increased volumes are going to be translated into increased profits because they're not going to have to add cost to the system to accommodate those increased volumes.
That's exactly right. Because of the efficiencies that they've built into their system, now those increased volumes are really going to lead to what we would call pure profit and drop to the bottom line.
Now, you noted something having to do with coal. Coal also used in steel making and also coal and electricity, but also coal for export. Now, the idea being that would railroads participate in that if we continue to export coal, let's say, to Europe?
Absolutely. There's different forms of transportation. There's the transportation within the U.S., but of course the transportation from the coast into middle America and back out to the coast to transport out to the global economy. So you're right, coal being exported to China and to other parts of the world, certainly it's going to benefit the rails that are transporting that coal back to the ports so that it can be shipped overseas.
Now, I noticed that we're not talking about any technology stocks, and I'm just curious, I mean, technology growth, no? Not part of
There's absolutely nothing wrong with technology, and there are going to be some good opportunities in technology. I think that what's very interesting right now in technology is Google. Not a new name, but what I really like about Google is Obviously, advertising is picking up, search advertising, but on top of that, I think Android is an excellent platform, and they're going to continue to expand. And if you look at streaming, data streaming, video streaming, YouTube is suddenly looking like a fantastic acquisition for Google. So I think a lot of the money that they've invested over the last few years to diversify away from just search ads is starting to pay off for them.